We want to look at the form this time of the deposit form, which is basic in concept. It's the form that's going to increase the checking account. However, it's a little bit more complex because the deposit form could be coming from different places and could be a result of different kind of revenue cycles. And so we want to kind of give another look at the different formats of the revenue cycle. You'll note that the deposit form isn't over here under the customer category, although I would primarily think of the deposit form as part of the customer cycle. Why? Because we hope that the money that's increased in our checking account is coming mainly from goods and services we provide to customers, and therefore is typically the end result of whatever kind of customer cycle that we have. However, I think QuickBooks puts it over here because we might have deposits from something other than customers, such as us, the owner, putting money in, or if it was a corporation, the issuance of the stock, the owners being the shareholders putting money in, or if we took out a loan and we made a deposit. So that's why maybe they put the deposits over here, even though we hope that mainly it's part of the customer cycle. Let's take a quick look at the flow chart again, just to remember how the deposits fit into it, noting this is the desktop flow chart, but it's just a flow chart, people. Don't get mad. We're on QuickBooks Online. We're just using the desktop. People, I have to say this every time because people get upset, like, why are you looking at the desktop? It's just a flow chart. The forms are going to be the same for just about any kind of accounting system. The flow will basically be the same. Okay, so we can see over here the deposits in the banking area, but it's clearly got an arrow going from the customer cycle over to that deposit form. And you can see no matter what kind of system we're using, the deposit form is typically the end process of any kind of revenue cycle. So quick review. The easiest revenue cycle is one where we have gig work or something. You get paid by YouTube. It goes directly into your checking account. You possibly use the bank feeds to record the revenue, which means that you're creating a deposit form from the bank feeds. Now we might lose a little bit of data because that deposit form is not designed to record revenue in QuickBooks. It's usually the sales receipt and the invoice that is designed to do that. But that might be the easiest thing to do. Or we might be at a cash register, in which case we would use a sales receipt form. That would be a cash-based system, but we can't normally just deposit the sales receipts into the checking account. We could, and that means this would be acting like a deposit form, but normally we don't, because if I collect revenue at the point in time that I make the sale, and I collect like $105 transactions, when I physically go to the bank, I'm going to deposit it into the bank as one lump sum, not as $105 lump sums, which means it's going to hit the bank account in one lump sum. So when I record these sales receipts, I will typically put them into undeposited funds or some type of clearing account, which we'll talk more about in future presentations, and then deposit it into the bank account with a deposit form. And then I'd have to match that deposit form to what clears on the bank feeds. Or if we have a receivable situation, we have to send out an invoice, like a bookkeeping or a landscaping. We do the work first. We send out the invoice. And then when we receive a payment on the invoice. If we receive a payment, or when we receive a payment, then we record the received payment. This received payment, like the sales receipt, we could put directly into the checking account, making this act in essence as a deposit form. But we might have the same situation. We might get paid through a credit card or cash or an intermediary platform, in which case I want to put it into that clearing account again, so that when I transfer it to the checking account, it'll be in the same format as on the bank statement, making it easy to reconcile, also allowing me to deal with any kind of bank charges by the third-party platforms or the third-party financial institution like a credit card or something like that. Now note that, again, if you send out an invoice and you have like the QuickBooks checking account and you have this nice little link in the system and the invoice that pays it automatically through a QuickBooks checking account, then the system might be able to record these two basically automatically with that little process. But you would have to not only have bank feeds in that case, but have the QuickBooks banking. Otherwise, you're going to have to tell them to do a transfer with your third-party bank somehow, possibly with a link that way, and integrate the bank feeds. Okay. Now, the one other thing that could happen is you could get paid first, meaning they give you the money first. And normally, we'll talk more about this later, it's a more unusual transaction if you had that newspaper business or something where you get the money before you throw the newspaper through people's window, at which point you earn the money. So in that case, we typically record the received payment first, which actually records like a negative receivable because you didn't actually earn the money. So that's the weird one, because normally you get the deposit at the end of the time when you do the work. And you typically do the work at the same point in time you get paid, like in a restaurant or a food truck or any kind of store with a cash register, or you get paid after you do the work, like anytime you invoice somebody, but sometimes you get paid first, in which case the money goes in your checking account before you record the revenue. That's a little bit more unusual. Okay. And then we could also have a deposit for something other than from the customer, like we put money in to expand the business or we take out a loan. In those cases, we got to make sure that we don't record that deposit as revenue. All right.